What's up, guys? FrugalBC, and today I want to talk about the big Bitcoin crash, but I want to put it in context and talk about general investing strategies and how this fits in. Hey, what's up, guys? Got a big episode of FrugalBC ready for you today. Before we get into it, I would like you to hit that like button and smash the subscribe button. See, I flipped it up. Let's change it up. And so I want to do that because I want to be able to show this to more people, and I really want this channel to grow, and it has been growing, and thanks for everyone who's subscribed so far. And so I want to talk about the big Bitcoin drop today. You know, I think it was a little bit of a surprise to a lot of people, maybe not that much of a surprise that it dropped into the levels of, you know, the 28,000 mark. I believe it stayed above that. I'm going to show you the chart here in just a second. You might be seeing that right now. It's kind of bounced back up since then. I don't want to get too much into pricing. Like, you know, Bitcoin was on kind of a tear. It was in the 60,000s. Now it's back down to, it's been tending to be in the 30, somewhere in the 30,000s. But I want to talk more about strategy. That's more important to me. So I've heard advice that you should put all your money in crypto, and I think that's fucking terrible advice. Sorry to say. I just don't think that's a good idea. Crypto is a very volatile asset. It's been, for the most part, a very positive volatile asset, but who knows what this is going to do. You know, we're talking about maybe a multi-year bear cycle. They do have, Bitcoin does have a halvening that happens every so often. That makes it more valuable, and I do believe in the long-term viability of Bitcoin, and I do invest pretty regularly into Bitcoin. However, the difference is I don't put all my money into Bitcoin, and I think that's a really important distinction, and it's something that you should be mindful of too. So I want to tell a little story here. Back in March of 2020, excuse me, get my dates wrong there. In March of 2020, we saw, if you were a stock investor, you saw your portfolios drop, and by a pretty severe amount, to the point where even after several years of investing, I went underwater for a little while. So the instinct, and there's group psychology about why this is, and I'll get into that in a second, but the instinct is always to sell when you see it going down. So this is sort of the we're heading off a cliff. Let's stop before let's jump out before we go over the cliff. This is the feeling that you get. Statistically, however, this is the opposite of a winning strategy. What you're doing, so if you let's take March 2020 for example. So we saw stocks drop by maybe as much as 50%. I mean, my portfolio probably dropped about that much. So I might see that and think, oh no, that's really, really bad. And it is bad. Of course it's bad. But I might see that and say, oh my gosh, I'm going to pull all my money out before it goes down further, which I could do. And now I've locked in my losses. So once I've sold, those losses are on the books. Before I've sold, I've still got a chance. That money, that could go back up. And considering most of my money is in index funds, I'm willing to make that bet because I'm willing to make a bet that the American economy over time is going to go up, even though it's going to have dips. If we see that with inflation, prices keep going up. The thing is, the economy keeps growing. The people who are in charge of stocks, you know, Wall Street, the main functionary of the stock market, has the politicians in their back pocket. So you notice whenever something is bad for Wall Street, they get help like right away. And you don't get that same help. You don't see that same help from the American people. So I trust my money to be in the stock market. And instead of taking money out, I put more money in, which is the opposite of how people feel, what they feel like they should do. But statistically, it is what you should do because now stocks are on sale. And because of that, my portfolio really catapulted after the last year and a half. It's really grown. So what's the lesson there? Well, the lesson is that you probably heard Warren Buffett's edict, be greedy when others are stingy and be stingy when others are greedy. Well, that's pretty good advice because this is exactly what I did. When others were stingy, in other words, or fearful is the other one. You could replace fearful for stingy. When people are fearful and they're pulling their money out, that's usually the time to put their money in. Now, there are exceptions to that. Individual stocks might be one of them. If you think the company is actually going to go under, then maybe pulling your money out before it's all gone isn't such a bad idea, but it kind of depends on the situation. And generally speaking, it's still a bad strategy. Generally, when you bet on companies, you want to bet on companies that are going to do really, really well over the long term. So you might bet on 10 companies and, you know, 5 of them will be middling, 4 will go out of business, and 1 will be just bananas. And the bananas one is the one that's gonna make you on the money. This is what venture capitalists do, by the way. They out of every 10 companies, you know, they hope 1 goes to the moon, and the other ones will be terrible. so that's part of it. So what about Bitcoin? Bitcoin's sort of an interesting class, right? Because you could almost think of it as an individual stock, but it's really more of a currency. So how do you evaluate that? The way I look at Bitcoin is I think of it as less volatile than an individual stock in terms of not so much price fluctuation in the fact of its ability to go to zero. I think there's a very small chance that Bitcoin will become completely worthless. I don't think it will ever completely lose worth. It might drop a lot. Maybe the market eventually decides Bitcoin is only worth 20,000 a piece and that's the end of it. I don't know. I'm not an expert on those things, but I do know that it has a utility and a function that a company can't quite mimic, because if people stop buying a product from a company, then they're just going to go out of business. But the idea that everyone in the world is suddenly going to decide, yeah, Bitcoin's stupid, I don't want to do this anymore, that's pretty unlikely at this point. It might shift to maybe Ethereum is the more useful asset, or maybe one of these altcoins, I don't know. But I really feel that your best bet is probably to hold on to Bitcoin for a while. Now, again, this isn't investment advice. I'm just saying what I feel about this, what my views are. So I didn't have a lot of extra money laying around that I could have put into the dip, and I wish I had, because it was pretty far down for, an hour or two, and I saw it, and had I had extra money, and actually I could have taken some of my DAI and put it in, and I kind of think I should have, but I didn't, so it is what it is. Well, probably a good lesson there is to keep some cash on hand to invest, but I like to have my assets working for me, so as soon as I get money, I put it in. I think the best long-term strategy, in my opinion, that I'm going to be following is to continue to dollar cost average, because over time, I really do think Bitcoin is going to increase in value, or at least stay roughly the same. So then it's just a savings account. And that's fine too. It'll be a bummer to not see it go up, but I don't think that's going to happen. I think it's built-in scarcity, and it's happening. I think it's going to lead to more value over time. I think more and more uses are coming for Bitcoin and for other cryptocurrencies. So I don't see that you're going to put that genie back in the bottle. What it ultimately looks like, that's to be determined, but that's my opinion. So we'll see if I'm right. But the main thing I want to get across today is the idea of thinking it long term and training yourself to get less excited about the rises, because they're often temporary, and less anxious about the drops, because they are also often temporary and could be good buying opportunities. That's the main takeaway. I suppose I could have just said that, but I wanted to talk this through and kind of work through the process and give some examples so that you understand it. If you're still here, hit that like and subscribe button if you haven't already. I appreciate it. Leave a comment if you have other opinions, or you agree with me or don't, whatever. And we'll see you next time.